Are you looking for a Tuesday trade? I got a great one for you, and you're going to want to stay until the end because I'm going to show you how you can potentially turn $10,000 into $30,000 in 1 year's time. Check it out. MP Materials, they are the biggest mine to market company in the US by far. Now, if you don't know what mine to market means, I don't blame you. I didn't know until recently. Basically, what they do is they dig up rare earths in California and they use that material in EV, wind, defense, and electronics. Now, this is a great play given the climate regarding the tariff situation and China tightening export rules on rare earth products. Now, not only is MP Materials a powerhouse, but they have a long-term agreement with General Motors to supply alloy and magnets. And even better than that, recently into a multi-billion-dollar deal with the US Department of Defense that includes a floor on the materials. So let's say the material price goes down, MP Materials is guaranteed a certain amount of money for the materials that they provide, which helps them maintain continuous revenue. Now, all the big mutual funds are investing in MP, Vanguard, State Street, T. Rowe, Invesco. Let's jump right in and let's see how much money you need to invest and how much you can make. And let's also talk about the risk involved. Check it out. Now, I'm going to show you using my live platform on Thinkorswim, MP Materials. This here is a 1-year chart, and you'll see they were kind of steady on an uptrend, and boom, have they exploded. In fact, today, they went up 21%. Now, here's the cool thing. When a stock is going up, the trend is your friend, and it's good sometimes to go with the momentum, right? And let's talk about options for a moment. Now, if you just bought the stock, you don't want to do that. Why? Because the stock can go way up, but you can't actually spend any of that money. So what can you do? You can trade options. Let me explain to you exactly what you can do, and I'm going to walk through it step by step. So for example, MP Materials closed at 95.06. Here's a trade for today. Buy 100 shares at 95.06 and sell a covered call right after you buy the shares. Let's see how much they're going for. So first of all, if you were to buy 100 shares, you would need to invest about $9,500 because it's going for $95 per share. You can use margin, but we're not going to talk about that. We're going to be super conservative and only use your money and none of the bank money. So after you buy 100 shares at 95.06, you're going to sell a covered call that's right over what you paid for the shares. Here's what a covered call means, guys. You own 100 shares of whatever stock, and then you're promising to sell your shares if it goes above a certain price before a certain date. Now, we're only going to look at Friday. Why? Because we want to look at short-term trades. I want to lock in my profit every single week. I don't want my capital at risk for an extended period of time, and I want to create income for myself every single week. Here's how you do it. You look at an October 17th call. So that's this coming Friday. Now, if you buy the shares at 95.06, the next strike price above that is $100. So what you're doing is you're saying, okay, I'm willing to sell my shares at $100 if the price continues to go higher. And that's cool because I paid 95. So I'm going to make 500 bucks on the share price. But even better than that, you get paid a premium for making that trade. And that is guaranteed money, guys, right in your pocket, right when you make the trade. And how much money is that? Let's take a look. If I'm looking at a $100 strike, strikes are down the middle of my page here and calls are on the left. It last trade at 390. That means that $390 gets dropped into your bank account as soon as you make the trade. What is better than that? Now let's calculate the rate of return because I told you guys if you start with 10,000, you can end up with like 30,000 over a year's time. Let me show you exactly how I came up with that number, and I'm going to walk you through all the math. Okay, so this particular contract, like I said, closed at $390. So I'm going to divide the premium that I get paid, 390, divided by how much money I have to put up. And again, this stock is trading at $95, right? So I'm going to put up $9,500. And that gives us a rate of return of 4%, guys. But remember, we would be putting this trade in on Tuesday with an expiration date of Friday. So we're only holding the trade for less than 1 week. If I was to annualize that out, 52 weeks in a year, if I was to do a trade like this once a week, I'm literally making 213% on my money. Oh my gosh. That means if I start with 10K, that 10K can become 30K in 1 year's time, but you don't have to wait a whole year. What I'm doing is I'm showing you trades that you can input every single week and create cash in your pocket on a regular basis. So much better than buying stock and waiting and hoping and praying that the stock goes up. Now, you might be wondering, okay, that's great, Michelle, but what happens if the stock goes down, right? Are you thinking that? Basically, if the stock does not close higher than $100 on Friday, I keep my 100 shares that I already bought. The contract expires worthless. I keep the $390, and next week I sell another call against the same shares. Trading options is so amazing. It can literally be life-changing. Anyway, I hope this trade helps. If you like my video, like the video, smash the like button. Subscribe to my channel. I'm putting up a video each and every single day. I'm walking through all different tickers. Let me know a ticker that you want to see a video on, and I'll create one. Cheers for now.